Hi, I'm Kelly Bean with Bean There Sold That, Villa Home. I'm also a retired military spouse and military relocation specialist. I'm here with mortgage broker Brooke Alvarez with Traditions Mortgage out of Bryan College Station, and this is part two of our conversations with Brooke. Hi, Brooke.
Hi, how are y'all?
I'm doing good. I hope you're doing well.
Doing fantastic.
Awesome. All right. Well, I guess there's some misconceptions and some issues with sometimes with buyers when we have conversations as real estate agents with them. So we're going to just ask you some questions and see what you can give us some answers for.
Perfect. I'm ready.
All right. What does the 0% down really mean to a VA buyer?
So, on a VA loan and all loans, you have your down payment amount, and then you have your closing costs, and then you have prepaids and escrow collection. So, when they're talking about 0% down for a VA buyer, they're specifically talking about the down payment amount. And so on, it's a huge help because for the other loan products, you could need anywhere from 3 to 5% of the sales price for the down payment portion. But on a VA loan, you can do it for 0% down. Now, you still need money for closing costs and escrows, but you were covered on the down payment percentage because the VA administration covers that portion for the VA buyer, or guaranteed, I shouldn't say covers, the more proper word is guarantees that portion for the VA buyer.
Gotcha. So they still have to have money down. If they don't have to have money down as a VA buyer, but they still have to have all the closing costs and the earnest money and the option fees and all of that.
Correct. And
Gotcha.
so that is very important. And it's important for all buyers because in order to ratify and execute a contract, you're going to be required to bring earnest money and option money to the table. And so you have to already have that in your bank account because that's going to be due within a couple of days of the contract being executed. And so you still have to have money in your bank account to cover that. Now, sometimes the great thing on a VA loan is if you do get seller concessions to cover that, you can get the earnest money back at closing, but you still have to have the money in the bank account at the beginning of the transaction to cover it in the case you do qualify for a VA loan for 0% down and then also get seller concessions to cover your closing costs and prepaids and escrows.
Gotcha. So, can someone use a VA loan more than once? And how does that work with eligibility?
You can use a VA loan more than once. You can also have two VA loans at the same time. Now, the specifics on that are per individual, and it can get very specialized depending upon the situation. But it is just great to know that if you've used your VA loan, you can use it again. And if you currently have a VA loan, it is possibility that you have bonus entitlement and that you can keep your current house on a VA loan and buy another VA loan. The important part is knowing that it can be done, and if that is something you're interested in, reaching out and we can walk you through the specifics of your individual scenario to make sure that you meet all the qualifications to allow those things to happen.
And their eligibility or their documentation, they have to go to their um I can't think of what that's called, the app or the website or whatever that shows them and they can get a certificate of eligibility through that.
They can, yes, or a lot of the times as the lender, I usually help do it for them. If you've already had a VA loan, it's a very simple process. If you've not utilized your VA loan before, there's a little bit more questions, but I can help walk them through that to fill out the application to get the certificate of eligibility online.
So I know there's a difference between a VA appraisal and the inspection done on a VA home. And I know that we want a home inspection done by a licensed inspector separately all the time, no matter what. But most people think that the VA appraisal includes an inspection. Can you kind of touch base with that?
So the biggest misconception and misunderstanding with this part is the terminology that is used. And a lot of the times the terminology is interchanged together, and that's what causes the confusion. Because you get a general inspection with an inspector who comes in and checks the integrity of the home, making sure that everything's working properly, just examples, electric, plumbing, making sure it's up, like what code standards it meets depending on the area. Um, but then you're also going to have an appraisal inspection, but the appraisal inspection is to generate an appraisal report. And so your general inspection is to know the integrity of the home, and the appraisal inspection is to help determine the market value and to make sure that the home is livable. And so people get confused between the two, and so they're separate. The general inspection you have to pay for yourself. The appraisal inspection to get the appraisal report is for the lender, and you have to pay for that. But that is to make sure that the lender is able to lend on the home and to make sure that the buyer is not paying more for the home than what it's worth up on the market value.
So as a real estate agent, I'm going to recommend that they, even if it's a VA loan, I'm going to recommend that they have a separate general inspection from a licensed inspector. And then when on your side of the lending side of it, there's going to be a VA appraisal that has a little bit of inspection in that, but it's not a full home inspection.
Correct. And so it's that inspection word that gets interchanged. And so to help people differentiate the difference, the inspection that you're referring to, I try to tell them that is a general inspection. And then what I'm doing is an appraisal inspection to generate an appraisal report to get us the market value of the home.
Gotcha. So is there anything else that we should know about a VA loan that's different that we didn't touch base on?
Yes, so the other part too is a pest inspection. And so on VA loans, you do have to have a pest inspection. The biggest misconception with that is that used to have to be paid for by the seller, and now it can be paid for by the buyer or the seller. So there's no extra added cost to sellers for them to accept VA offers.
What is the difference with accepting a VA offer to a real estate deal?
So the great thing about VA loans is they have a higher probability of closing, and they have a higher probability of meeting appraisal value and appraisal standards when it's compared to FHA and conventional loans. There has been a lot of misconceptions about VA loans and them being harder before previously, but that's not the case. Our veterans have worked very hard and have earned their right to this benefit. And it is a great blessing for them to be able to utilize purchasing a home with 0% down, minimum down or closing cost and escrow collection. And then for them to get to join into home ownership and start building their assets and their equity and net worth.
Very true. Well, I thank you very much for the conversation today on anything VA. I'm sure there'll be lots more questions that we can add to another video right now, and then we'll work on series 3 when we get a chance. If anybody has any questions, please comment on the video and we'll do our best to get those answered quickly as we can. We appreciate you joining in on us. Bye, Brooke.
Bye. Y'all have a great day.
Thanks. I'm Kelly Bean with Bean There Sold That Villa Home, And today we have mortgage broker Brooke Alvarez with Traditions Mortgage. Hello, Brooke.
Hi, how are y'all?
Doing good. We've worked together many times in real estate in the College Station, Bryan area with FHA buyers, VA buyers, conventional buyers. And buyers sometimes have misconceptions and questions um, with different things. And the misconceptions or questions about loans that we would like to take a minute just to touch base with. Let's see. The first question I have is, can you explain the difference between a mortgage broker and a bank lender?
Yes, so when you have a bank lender or a loan officer, they usually work for one bank. And so when you work for one bank, you have your base guidelines that Fannie and Freddie and FHA and HUD and VA put out. And then the banks usually create what's called overlays, which are their guidelines that have to be followed. When you are a mortgage broker, you work for multiple, what we consider banks or lenders. So you have more options to more products, and you're not just stuck to one set of lending products and lending guidelines. And then also, as a mortgage broker, we usually have a lot of banks who don't put on a lot of extra overlays. So we are lending based off of the requirements specifically set from Fannie, Freddie, FHA, VA, and USDA. And when you have that, it makes it a lot easier for a buyer to get approved, which is a lot of the time somebody's like, oh, I talked to so and so at this bank and they said I wasn't approved. Well, that's because that was based off of their guidelines and their overlays. Just because you weren't approved with one bank or investor doesn't mean that you're not approved with other banks or investors. And so the
So,
difference between the two pretty much is one is stuck to one bank and their guidelines, and another has multiple products and guidelines that they have access to.
so you as a mortgage broker can shop different banks with products, whereas if they go to a bank lender, they can only shop that product for that bank.
Correct.
Okay.
And then the other part that I get to also shop, not just from a product perspective, but I also get to shop interest rates because how interest rates are driven are based off of the mortgage-backed securities in the bond market. And with that, different banks have different needs, and therefore they're able to offer different rate buckets. And so when I'm going out shopping for my buyers, I get to shop all of the banks and investors and wholesale lenders that I work with to be able to see who has the best rate at that time.
Awesome. So can you tell us about down payments and the way it works? And do they have to have 20% down to buy a home?
No, we don't have to have 20% to buy a home anymore, which is absolutely amazing. And it's been that way for a while. I know it is a big misconception for some people because if you don't put 20% down, you do have what's called PMI, private mortgage insurance, or MIP, which is a monthly insurance premium. And depending on which loan program you go with, depends on which one you have. But essentially, it all works the same. If you don't put 20% down, you essentially have to pay that mortgage insurance each month. But the other biggest myth with that is that mortgage insurance is minuscule to what putting that extra down payment. So the other day, I had somebody that wanted to put 20% down, and we were going through the numbers, and their mortgage insurance ended up only being $50 a month, but we saved them almost $30,000 that they were able to keep in their bank account and keep in their investment portfolio to keep making money, as opposed to putting it all towards the home. And the only difference was a $50 increase in payment. And so nowadays, when you've got lower down payment options, sometimes you get interest rate benefits for that. And so the great part is we can go down all the way down to 0% down if you do VA or USDA, or we can go all the way down to 3% with conventional, or we can go all the way down to 3.5% with FHA.
Now, with that private mortgage insurance, after a certain amount of time and you reach that 20% of the equity in the home, can you change that?
Yes, absolutely. So you've got two ways that you can change that. Either you wait your time until you're at your 80% mark and then you can call and have them remove the PMI. Or if what's happened in the last few years is if the market keeps increasing in the value and the market value of your home, you can also call and have an appraisal done and they will remove the PMI. Now, that is on a conventional loan. It's different for FHA and VA, but there are other ways to try to get that MIP removed on FHA loans.
Awesome. So another misconception I think that some people have is their credit scores. What do credit scores need to look like, and do they have a minimum score?
So there's not technically a minimum score. That's one of those things where I talk about like overlays and guidelines. And so when it comes to Fannie and Freddie and FHA and VA, they don't set a minimum score. But what has to happen is we have to run it through an automated underwriting system. And based off of our experiences, we know usually what the automated underwriting system is going to take. And so essentially, a lot of the times we can go down all the way to a 500 credit score. Now, I say that, and it's great for a lot of people, but you have to know that the lower your credit score is, you usually have to either have a higher down payment or you have to have what we call as reserves, where that is you have money either in an investment account or a retirement account or a savings account, and you have to have so many months of the monthly mortgage payment saved away in one of those accounts that we can consider reserves.
And just to touch on that, does the credit score change the interest rate that a client can get?
The credit score also does change the interest rate. Yes. So it's like twofold. So it's great because the higher your score is, the better interest rate you're going to get. But also, too, things happen that we can't control and things happen with our credit score. And so it also provides options for people who've, gone through tough times or had some things happen. And so if you do have a lower score, it doesn't mean that you can't own a home. We just have to work through that either with, more down payment, a lower debt to income ratio also helps sometimes too. So there's different things, but the great thing is we can go all the way down to 500, 580 credit scores. They'll need a little bit more, but it is possible for some people.
So thank you so much for giving us that information. And we're just going to do some quick little information videos. And if anybody has any questions, they can comment on the video and we'll do our best to get those answered as quickly as we can in the comments. Thanks, Brooke. Have a great day.